Okay, let's unpack this. We're diving headfirst into a real-life corporate drama unfolding in Japan's tech world. Think boardrooms, billions of yen, and a kind of tug of war between some seriously big players.
Yeah, definitely high stakes.
Our focus today is Fuji Soft. They're a major IT services firm based in Yokohama, been around since, 1970?
That's right, 1970. A leading independent systems integrator. Pretty significant.
Yeah, pulling in roughly $300 billion annually. Yeah. And listed on the Tokyo Stock Exchange, prime market code 9749.
And their services are quite broad, too. Software development.
Right. Custom systems for finance, manufacturing, retail, embedded software for cars, electronics.
Plus their own enterprise software, Feud Gurum, cloud services, outsourcing. They do a lot.
A very broad operation, yeah.
And what's fascinating here, I think, is just the sheer scale and breadth. They're not some niche player. They're, a significant part of Japan's IT infrastructure.
Absolutely, touching so many key industries. So any major shift in their ownership has, ripple effects. And that major shift is exactly what we're here to dissect. Fuji Soft became the center of this high-stakes takeover battle. Two American private equity titans, KKR and Bain Capital, going head-to-head.
But wait, there's more, right? The plot thickens.
It really does. You've got Fuji Soft's own founding family involved, and an activist investor, 3D Investment Partners. Quite a cast.
Absolutely. You've got these massive global financial forces, like you said, but then there's this very personal aspect of the founder's legacy.
And the strategic maneuvering from the activist shareholder trying to unlock value.
Exactly. It's almost like a perfect snapshot of some of the bigger shifts happening in corporate Japan right now.
So our job here really is to get under the skin of this takeover. We need to understand all the twists and turns, the motivations.
Yeah, what was driving each move.
Right. And ultimately what this whole thing tells us about corporate Japan, about global investment.
And we've got a decent amount of info to work with.
Yeah, a solid stack here. Reuters, Bloomberg, Toyo Kizai, even Gigazine. Should help us make sense of it all.
Okay, let's get right into it then.
Sounds good.
Agreed. And to really get how this unfolded, we probably need to step back a bit.
Okay.
The real catalyst, arguably, was the arrival of this activist investor, 3D Investment Partners, back in 2022.
Right. Now, if you're not totally up to speed on activist investors, they basically buy a significant chunk of a company's stock.
And then use that position to push for changes.
Exactly. Changes they think will make the company more valuable. So in Fujisoft's case, 3D felt the company wasn't operating as efficiently financially as it could be.
Precisely.
Yeah.
3D identified what they called suboptimal financial efficiency.
Okay.
And started pressing for actions to boost value. Could be anything, really.
Yeah.
Selling off non-core parts, reorganizing.
Or, they specifically suggested even taking the company private.
That was definitely on the table.
Yeah.
And, that kind of pressure, it gets management's attention.
And Fujisoft's board did react, didn't they? They put together this Corporate Value Enhancement Committee.
Yeah, sounds very official.
What exactly did they do?
Well, that committee was essentially formed to look at these strategic options, including, yes, the possibility of going private that 3D had floated.
So it showed the board was taking the activists' concerns seriously.
I think so. Willing to consider some pretty significant changes to the company's structure anyway.
Okay. Then if we jump ahead to, mid-2024, KKR steps in, and they make a buyout offer. The board actually supports.
Right.
Why KKR? What was the thinking there?
Well, the board's reasoning, based on the reports, it seemed to focus on simplifying the ownership structure and getting away from that constant public market scrutiny.
Right, the quarterly earnings pressure.
Exactly. Going private with a firm like KKR could offer maybe a bit of a shield, allow for more substantial long-term restructuring and investment without those short-term pressures.
So a chance to kind of catch their breath and reshape things?
Pretty much. And for KKR, this looked like a strategic play on Japan's IT sector.
They saw potential.
Yeah, they saw Fujisoft as a strong foundation, growth potential, something they could build on using their global network, their investment expertise. They probably identified areas where they thought, okay, we can boost efficiency here, drive expansion there.
Okay, so the scene is set. KKR makes their first move, tender offer, August 8th, 2024. What were the key details? And maybe just quickly, what exactly is a tender offer in this context?
Good point. So a tender offer is basically a public invitation. KKR is saying to all Fujisoft shareholders, hey, we want to buy your stock at this specific price 8,800 per share within this time frame.
Got it.
And that price valued Fuji Soft at roughly $558 billion, which is what, about $3.8 billion at the time?
It was a premium.
Oh, yeah. About 19% higher than the stock's price just before the announcement. So pretty attractive.
And crucially,
the Fuji Soft board unanimously backed it. They recommended shareholders accept the offer.
Sounds like smooth sailing then. Almost a done deal.
You'd think so. But KKR's strategy added a layer of complexity. It wasn't just one single offer to buy everything.
Ah, right. They used that two-step bid strategy.
Exactly. You can think of it like step one, KKR says, we want to buy a significant chunk, maybe get a strong voice.
Okay.
So you got about a third of the shares that way. Then step two is, okay, now we want the rest to take the whole company private.
But that two-stage thing can make it a bit more complex for the remaining shareholders, right?
It can introduce some uncertainty,
Yeah.
But by early October 2024, that first phase was successful. KKR had secured about a third of Fuji Soft's shares.
And that included support from
3D investment partners, the activists who started it all. They were seemingly happy to cash out at that premium.
Okay, so KKR has a solid foothold. Looks like they're on track. But then, plot twist.
A big one. Out of seemingly nowhere, Bain Capital jumps in with a counteroffer.
Talk about shaking things up.
It was definitely an unexpected move. October 11th, Bain announces their own tender offer, $9,450 per share.
Higher than KKR's offer.
Yep, a noticeable 7.4% higher. But there were other significant differences in Bain's approach, too.
Like their connection with someone pretty important.
Exactly. Bain had managed to get the support of Fuji Soft's founder, Hiroshi Nozawa.
Who still owned a big chunk of the company.
Around 18.5%, yeah. A very significant stake. And the Nozawa family agreed not to tender their shares to KKR and to support Bain instead.
Wow. That's a major hurdle for KKR's plan.
Huge. A really powerful endorsement to have on your side.
And Bain's offer structure was different too, wasn't it?
It was. Bain's offer didn't have a minimum acceptance condition initially. Meaning they were signaling they might proceed even if they didn't get, say, the 2/3 needed for a full squeeze out immediately. Unlike KKR, who needed to hit a certain threshold.
Okay.
Bain's initial offer did depend on getting the Fuji Soft board's approval, though. They were aiming for a friendly deal at first.
What? The board stuck with KKR, right?
Yeah.
Even though Bain's price was higher at that point.
They did. Which might seem a bit surprising on the surface.
Yeah, why stick with the lower offer? Were there other factors besides just the stated certainty of privatization?
That's a really good question. I mean, while the board emphasized that full privatization aspect with KKR, it's highly likely other things were at play. Maybe they just had a better rapport with KKR, or a stronger belief in their post-acquisition plans.
Or maybe concerns about the founder's influence if Bain won, given they seem to have different visions.
That's certainly possible. The board did publicly raise questions about corporate value improvement under Bain's proposal, so there was definitely some skepticism there, beyond just the price.
Meanwhile, the founder is openly saying, no, I prefer Bain's higher offer. You've got this real split at the top.
Very public disagreement.
How did KKR react to Bain's entry and the founder's support?
Well, KKR wasn't just going to roll over. In early November 2024, they hit back. They raised their bid to $9,451 per share.
Wait, $9,451?
Yep. Just 1 single yen more than Bain's offer.
That seems almost symbolic.
It does, doesn't it? Maybe just enough to let the board keep saying KKR's offer was financially superior, even if just barely. They then launched their second-round tender offer on November 20th.
Okay, a 1 yen difference. Keeps them in the game, I guess. But Bain wasn't backing down either, were they? They took a pretty significant step next.
They did. Having been rebuffed by the board, Bain decided to, well, go hostile.
Hostile.
Yeah. December 11, 2024, they announced a tender offer at $9,600 per share. And crucially, they dropped the condition needing board approval.
Wow. That's not very common in Japan, is it? Hostile takeovers.
It's relatively rare, yeah. Culturally and structurally, they often face big hurdles. It's not unheard of. There have been cases, but it definitely showed how serious Bain was. A bold move.
Definitely ups the ante. What else did Bain do to try and strengthen their position?
Well, they secured all equity funding for their bid.
Meaning no debt involved.
Right, which can give you more flexibility, maybe more speed, compared to borrowing money for the deal. They still had the founder, Hiroshi Nozawa, and his family backing them. And they set their own minimum acceptance level at 50.1% of the shares, including the founder's stake.
So aiming for majority control, even without the board's blessing.
Exactly. They were ready to push ahead.
Okay, so Bain's on the offensive. But KKR's second tender offer, the one at $9,451, it wasn't exactly flying off the shelves, was it?
No, that's right. KKR was finding it difficult to reach their target threshold.
Why was that?
Well, many shareholders were probably holding back, right? Watching this bidding war unfold, maybe hoping Bain's higher hostile offer would succeed, or that KKR would have to raise its price again.
Makes sense.
So KKR had to extend their tender deadline multiple times, but crucially, they didn't increase their price during that period, which suggested they weren't getting the shares they needed.
It really sounds like a standoff. KKR's offer just kind of lingering, Bain poised with this hostile bid. What finally broke the deadlock?
It was KKR again. They made the decisive move, February 4, 2025.
What did they do?
They significantly increased their offer to $9,850 per share.
Wow, okay. That's a substantial jump.
It really was. Put them clearly ahead of Bain's $9,600 bid.
And they extended the deadline again?
Yep, extended the final tender deadline to February 19th. And, importantly, they promised to compensate shareholders who'd already tendered at the lower price, basically topping them up to the new, higher price.
That's smart. Keeps everyone happy, or happier anyway. So Bain is now facing a much higher offer. How did they react?
Well, faced with that significantly higher bid, Bain Capital essentially folded. They chose not to make another counteroffer.
They withdrew.
They did. On February 17, 2025, just before KKR's deadline, they publicly withdrew their takeover proposal. The bidding war was over.
Why? What reason did they give?
They said the decision came after discussions with the founder, Hiroshi Nozawa, and considering the interests of all shareholders, basically acknowledging KKR's price was likely to win.
A somewhat graceful exit, maybe? Though I think I read they had a little parting shot.
They did have a bit of a pointed comment, yeah. In their withdrawal statement, Bain mentioned the fairness of Fuji Soft's sale process, how the company handled the offers, maybe hinting at some dissatisfaction or a feeling the board had favored KKR all along.
Interesting subtext there.
Definitely. But regardless, with Bain out, KKR's path was clear.
And they wrapped it up successfully. What were the final numbers?
Yep. By that February 19 deadline, KKR's improved offer worked. They secured approximately 57.3% ownership of Fuji Soft's outstanding shares.
Enough to meet their condition.
Yes, enough to close the deal. Fuji Soft officially announced the success of KKR's bid the next day, February 20th, 2025.
So, looking back at that whole bidding war, KKR started at $8,800, ended at $9,850. What's that total increase?
Let's see, to $1,050 per share increase, which is about 12% higher than their first offer.
And compared to the price before all this started?
The final premium ended up being nearly 33% over the unaffected share price. Pretty significant uplift for shareholders.
And the final valuation? At
$9,850 per share, it put the company's value at approximately $325 billion. So over $4.7 billion US.
Quite a journey in valuation. And we touched on the different deal structures, KKR's two-step versus Bain's initial single-step. Any thoughts on the pros and cons of those?
Well, KKR's two-step approach, needing that minimum acceptance, allowed them to secure initial support first, then aim for full control. But like we said, it created uncertainty for those who didn't sell early and risked the second step failing.
Right.
Bain's single-step, no minimum offer showed commitment and flexibility. But their initial need for board support was a weak spot when the board stayed with KKR.
And the lack of a high minimum might have raised questions about their long-term plan if they only got, say, 51%.
Exactly. How much control would they really have? What was the end game? Whereas KKR was clearly aiming for 100% privatization from the start.
And the financing KKR used a mix of equity and debt, you said, while Bain switched to all equity for the hostile bid.
That seems to be the case. Bain probably started thinking about using debt, which is typical for PE buyouts. But going hostile. Switching to all equity makes you more agile, avoids potential issues with lenders maybe getting nervous about financing a hostile deal against the board's wishes.
Makes sense. Both sides clearly saw a lot of value here to justify those final high bids. What was the justification? What did they think they could achieve?
Well, both KKR and Bain likely saw big opportunities to boost Fuji Soft's profitability and market value as a private company.
How?
Things like streamlining operations, maybe selling off non-core assets, focusing investment on high-growth areas.
Like AI or cloud?
Potentially, yeah. KKR specifically mentioned leveraging their expertise in digital transformation and helping Fuji Soft expand internationally. Essentially, they both believed they could unlock hidden potential that maybe wasn't being fully realized as a public company.
Okay, this whole story has so many different players, each with their own motivations. Let's quickly recap how the key stakeholders reacted. starting with management and the board.
Right. Management and the board, excluding the founder, of course, they consistently backed KKR.
Why?
They seemed to value the certainty of full privatization KKR offered. Probably had a good working relationship, felt comfortable with KKR's plans, and KKR, in turn, praised management committed to supporting their growth strategy.
Maybe also some relief that Bain, aligned with the potentially disruptive founder, didn't win.
Could be. That's speculation, but certainly plausible.
And the founder, Hiroshi Nozawa, his position was really quite unusual.
It really was. He was clearly against the KKR deal, strongly preferred Bain. Why? Maybe he felt Bain offered a better chance for continued involvement, or perhaps less drastic change to the company he built.
His opposition created that rare founder versus management dynamic.
Exactly. Though reports later suggested an agreement was reached for a smooth squeeze-out, implying he eventually, perhaps reluctantly, accepted KKR's win.
What about the activists? 3D investment partners, they kind of started this whole thing.
Yeah, for 3D and any other activist shareholders, this outcome was likely seen as a big success.
They got what they wanted.
Pretty much. They pushed for change. A sale happened at a significant premium. They partnered early with KKR, benefited from the bidding war driving the price up. It really demonstrates the impact activist investing can have, even in Japan.
And what about the folks on the ground? The employees at Fuji Soft, their clients, all this back and forth must have caused some anxiety.
Oh, absolutely. There would have definitely been uncertainty during the fight. But KKR winning, with the existing management staying on, that probably provided some sense of stability, maybe relief.
Did KKR try to reassure people?
Yeah. Reports mention KKR holding town hall meetings, emphasizing no immediate layoffs or major strategic shifts, talking about investing in the business. That kind of communication is key in these situations.
And clients too, presumably reassured by management continuity.
Likely, yes. And KKR's commitment to support growth would also be important for client confidence.
Finally, how did the wider market and the regulators view this battle?
Well, the market definitely reacted. Fuji Soft's stock price surged as the bids went up. Investors clearly saw value being created, or at least unlocked.
And regulators? Any roadblocks?
Apparently not. Japanese regulators, the Fair Trade Commission, Ministry of Economy, Trade and Industry, didn't seem to raise any major objections. The deal likely didn't pose significant competition issues or national security concerns.
Though Bain's hostile attempt probably raised some eyebrows.
It certainly sparked discussion in legal and corporate governance circles about M&A norms in Japan, yeah, even though it failed.
It's interesting, though, that the board didn't seem to deploy any major takeover defenses like a poison pill, even when Bain went hostile. Why not?
Well, the board's primary duty is usually seen as maximizing shareholder value. Actively blocking a potentially higher offer with defenses can be controversial. They probably felt that by strongly endorsing KKR and highlighting its benefits, they were fulfilling their duty.
And maybe they felt KKR was a strong enough partner to win anyway.
That's possible, too. They might have calculated that formal defenses weren't necessary or could even backfire.
So Fuji Soft is now set to become a private company, fully owned by KKR. What are the next concrete steps?
Right. So Fuji Soft became a KKR subsidiary in late February 2025. But KKR didn't quite get the supermajority needed for an immediate squeeze-out in the tender offer. They got about 57.3%.
Okay.
So the next step is a special shareholders meeting planned for April 2025. The goal there is to approve a share consolidation, basically a reverse stock split.
And that achieves?
It's a standard legal mechanism in Japan to effectively buy out the remaining minority shareholders and allow KKR to reach 100% ownership.
And that's expected to go smoothly.
Yeah, especially with the founder reportedly cooperating now. Once that's done, Fuji Soft's stock will likely be delisted, probably around May 2025.
And once it is private, what's the likely future under KKR? What changes might we see?
KKR has been pretty clear about their commitment. Yeah. Supporting growth, enhancing value, driving transformation.
What does that mean in practice?
Could mean significant investment in tech, like AI and cloud. Maybe strategic acquisitions to broaden services. Definitely a focus on operational efficiency, cost structures, maybe improving governance.
And international expansion.
That's something KKR highlighted using their global network to help Fuji Soft grow abroad.
What about leadership? Any changes expected there?
Nothing officially announced about big changes. Current management seems likely to stay, given KKR support. The founder's role will likely diminish, obviously. KKR might bring in some of their own people as directors or advisors.
So overall, a positive outlook, but likely involving significant change, freed from those public market pressures.
That seems to be the idea, a chance to really focus on long-term transformation.
Okay, so KKR ultimately won. Beyond just having the highest bid, does this whole thing send a bigger message about how foreign capital, like PE firms, are viewed or operate in Japan now?
That's a great question. I think KKR's success here, even against the founder's wishes, signals a growing, maybe not comfort, but acceptance. An acknowledgement that active foreign investment can be a catalyst for needed change and value creation.
A shift away from more traditional, maybe insular practices.
Possible, yeah. It shows management teams are increasingly open to PE partnerships, especially when facing activist pressure.
And Bain's hostile move, even though it failed, does it still have wider implications?
I think it does. It was definitely bold for the Japanese context. While unsuccessful here, it might put other Japanese boards on notice. It shows global PE firms are willing to consider more aggressive tactics.
Could lead to more companies thinking about their defenses.
Potentially. Or maybe just accelerate the trend towards being more responsive to shareholder value concerns in the first place. It certainly challenges the traditionally consensual nature of M&A in Japan.
So it sounds like Fuji Soft is heading into a period of pretty significant transformation. And for KKR, the end game is? Well, PE firms don't usually hold companies forever. They typically look to exit an investment within, say, 3 to 7 years.
Wow.
If KKR successfully grows Fuji Soft, improves its profitability, makes it more valuable, they could potentially relist it on the stock market through an IPO or sell it to another company, maybe a strategic buyer in the tech industry. That's how they generate their returns.
Okay. This whole saga really feels like an important case study for corporate governance in Japan. What are the main takeaways?
I think there are a few key things. One, the growing willingness of Japanese management to consider PE buyouts, especially under activist pressure. Two, it shows even powerful founders aren't insurmountable if management and other shareholders align differently.
Right.
Three, the competitive bidding process really highlighted the importance of maximizing shareholder value. It forced KKR to significantly raise its price.
And that might attract more investors. It could definitely encourage other global investors to look more closely at potentially undervalued Japanese companies, especially in tech. It signals a changing landscape where efficiency and shareholder returns are gaining prominence.
Okay, so to kind of sum it all up, we've seen this really intense, months-long bidding war for Fuji Soft, kicked off by an activist investor, fought between two PE giants, KKR and Bain, with different strategies.
And that fascinating subplot of the founder backing the losing bidder.
Exactly. In the end, KKR's deeper pockets won out. Their higher offer sealed the deal, and Fuji Soft is now starting this new chapter as a private company under their wing.
And this raises a really interesting question, maybe for you, the listener, to think about. What does this high-profile battle really signify for the future of mergers and acquisitions in Japan? And how might the strategies we saw here, KKR's persistence, Bain's hostile attempt, influence other corporate shakeups, maybe even globally?
Yeah, where's that balance between shareholder value, company independence, and long-term growth in these complex scenarios? Lots to consider.